Type of social enterprise: credit union. Credit unions are community-based financial institutions providing savings and loan facilities for their members. A credit union is a member-owned financial cooperative controlled by its members and operated on the principles of people helping people, providing its members credit at competitive rates as well as other financial services. Worldwide, credit union systems vary significantly in terms of total assets and average institution asset size, ranging from volunteer operations with a handful of members to institutions with assets worth several billion US dollars and hundreds of thousands of members. Credit unions operate alongside other mutuals and cooperatives engaging in cooperative banking, such as building societies.
Well, it's sort of like a bank, only way better. They offer all the stuff you like about banks, and none of the stuff you don't. Think of it as a club that anyone can join, filled with people helping each other instead of making some fat cat fatter.
No.
Or richer.
No.
You know what I mean. And credit unions are not just for profit, which means the money they make is shared with local communities and with members like you. Now that makes sense.
Credit unions offer the same consumer financial services that you can find at a bank. Checking accounts, savings accounts, CDs, auto loans, home loans, debit cards, credit cards, and more. So, you can find the same kind of accounts and loans at a credit union as you can at a bank. But credit unions are different from banks, and we're going to explain how. Reason number 1. Credit union members elect their board of directors. Credit unions are member-owned. When you join Members Credit Union and open up an account, you're not just a customer, you're an equal owner. Each member votes in the democratic election of the credit union's board of directors. It doesn't matter how much money a member has, each member has one equal vote. That means you have a say in credit union decisions that affect you and your credit union accounts. At a bank, you are a customer, not an owner. The bank is owned by a group of investors who may not even be customers of the bank at all. These investors decide who is on the board of directors and therefore heavily influence big decisions that affect you and the money you work hard for to save in the bank. Reason number 2. Credit union members share a common bond. Credit unions serve groups of people who share a common bond because they work together or live in the same community. Traditionally, each credit union began with a few hardworking employees or socially concerned citizens who were unsatisfied with the service provided by their local bank. So, they started their own credit union to give their fellow employees and neighbors a place to borrow and save money in a fair and cooperative environment, not influenced by rich bank investors. The popularity of credit unions has grown quite a bit since their humble beginnings, and now almost everyone in the world can find a credit union where they work or where they live to join. Banks are founded by rich investors who already have a lot of money. They start a bank with hopes of making a profit. These investors most likely are not interested in bonding with their customers. Reason number 3. Credit unions are member-focused. Since our members own us, we focus on their needs. When the credit union earns money, we pay it back to our members with free benefits, fewer fees, better loan rates, and higher dividends to your checking account and savings accounts. Banks have to answer to their investors, who are focused on making more money. That's why you'll find that banks charge more fees and pay less back to their customers. Reason number 4. Credit unions are socially responsible. Members Credit Union understands what it means to be a good community citizen. Not only do we provide scholarships to members pursuing an education, we are also community involvement fanatics. Our employees have raised thousands of dollars, walked hundreds of miles, and volunteered many hours to support community causes like research for curing diabetes, providing support services for cancer patients, collecting toys and food for underprivileged families, supporting active military and veterans, and collecting school supplies for local schools. And you know what? There are socially responsible people who work at our local banks too. Bank employees are part of our community. They are caring citizens, and some of them are even proud credit union members. Maybe one day those rich investors who own the banks will take a cue from their socially responsible employees. But until that happens, you can always join a credit union.
Credit unions are usually consumer-owned financial services cooperatives in which every depositor becomes a member owner. Members may attend the annual meeting and help elect a board of directors that is typically made up of community volunteers, most of them with considerable financial and other relevant areas of expertise. This is quite a difference from big international banking conglomerates, with their distant investor-owner millionaires and highly paid directors who have no knowledge of or loyalty to local residents. Credit unions, as with all co-ops, come in all sizes, from a single facility with a few score members to huge multi-branch operations that cover lots of territory and employ many local people. Community development credit unions are a special category created by the industry to specifically serve lower-income communities. Credit unions differ from banks and other financial institutions in that those who have accounts in the credit union are its members and owners, and they elect their board of directors in a one-person, one-vote system, regardless of their amount invested. Credit unions see themselves as different from mainstream banks, with the mission to be community-oriented and serve people, not profit. Credit unions were created to enable people to pool their financial resources to help themselves and others. In response to members' growing financial services needs, credit unions' products offered have expanded over decades to include a wide variety of low-cost, high-quality financial services such as auto loans, real estate loans, member business loans, debit and credit cards, and much more. Each credit union offers the services that are the most important to its own members. According to the World Council of Credit Unions, at the end of 2014 there were more than 57,000 credit unions in 105 countries. Collectively, they served more than 270 million members and oversaw almost $1.8 trillion in assets. Credit unions offer many of the same financial services as banks, but often use a different terminology. The services offered by a credit union include a wide range of financial services, such as saving accounts, checking accounts, credit cards, certificates of deposit, and online financial services. A credit union's fee, interest rates, and levels of service are highly responsive to the needs of its members. Generally, they offer lower interest rates on loans and higher interest rates on saving accounts and certificates of deposit. Credit unions may be formed among any group of members who have a common interest, usually community groups or employees of a particular organization. The board members of the credit unions are usually volunteers. Credit unions are generally not for profit, so often profits are shared by members. In the credit union context, not-for-profit must be distinguished from charity. Credit unions are not for profit because their purpose is to serve their members rather than to maximize profits. So, unlike charities and the like, credit unions do not rely on donations and are financial institutions that must make what is, in economic terms, a small profit, that is, in non-profit accounting terms, a surplus, to remain in existence. Credit unions offer most of the same services as banks, but differ in that individual members are owners and there are generally less assets under management. Because credit unions are usually considerably smaller than banks, they are able to offer more personalized advisory services to their members, and they may offer lower cost banking service. There are several operating principles of credit unions. By serving individuals of all wealth levels, credit unions are able to provide greater numbers of poor and low-income people with an array of savings, loan and insurance products. Being a financial cooperative, credit unions follow very strict operating principles. Open and voluntary membership. Membership in a credit union is voluntary and open to all within the defined common bond of association that can make use of its services and are willing to accept the corresponding responsibilities. Democratic control. Credit unions members enjoy equal rights to vote, one member, one vote, and participate in decisions affecting their credit union without regard to the amount of savings or deposits or their volume of business. Service to members. Credit union services are directed to improve the economic and social well-being of all members. Distribution to members. To encourage thrift through savings and thus to provide loans and other services, a fair rate of interest is paid on savings and deposits within the capacity of the credit union. Building financial stability. A prime concern of the credit union is to build its financial strength, including adequate capital reserves and operating internal controls that will ensure continued service to members. Ongoing education. Credit unions actively promote the education of their members, officers and employees, along with the public in general, in the economic, social, democratic and mutual self-help principles of credit unions. The promotion of thrift and wise use of credit, as well as education on the rights and responsibilities of members, are essential to the dual social and economic character of credit unions in serving member needs. Cooperation among cooperatives. Credit unions within their capacity actively cooperate with other credit unions, cooperatives and their associations at local, national and international levels in order to best serve the interests of their members and their communities. Social responsibility. Credit unions seek to bring about human and social development. Decisions should be taken with full regard for the interest of the broader community within which the credit union and its members reside. According to the World Council of Credit Unions, a credit union's revenues from loans and investments must exceed its operating expenses and dividends, interest paid on deposits, in order to maintain capital and solvency. Credit unions and banks in most jurisdictions are legally required to maintain and reserve requirement of assets to liabilities. If a credit union or traditional bank is unable to maintain positive cash flow and or is forced to declare insolvency, its assets are distributed to creditors in order of seniority according to bankruptcy law. In the aftermath of the financial crisis of 2007-2008, there was a dramatic increase in the number of bank failures, but not in the number of credit union failures. And in 2017, all depositors at failed credit unions were fully covered by deposit insurance, but depositors at a failed traditional bank were not covered by deposit insurance. Credit unions often form cooperatives among themselves to provide services to members. For example, Co-op Financial Services, the largest credit union-owned interbank network in the United States, provides an ATM network and shared branching services to credit unions. Other examples of cooperatives among credit unions include credit counseling services as well as insurance and investment services. Co-op Financial Services, formerly known as Co-op Network, is an interbank network connecting the ATMs in the United States with additional locations in Canada and certain US Navy bases overseas. It is the largest owned interbank network in the United States. Second example is the Indiana Credit Union League, which sponsors an initiative called Ignite, which is used to encourage innovation in the credit union industry with the Filin Research Institute.
As the world of financial technology continues to evolve, at Co-op, so do we. We're poised to offer the industry's broadest portfolio of solutions and unprecedented scale. allowing credit unions to benefit from a single integrated system of member touchpoints, so you can reach your members everywhere, in every way they want to engage. Co-op's payment solutions help you compete in an era when interchange revenue is increasingly vital. Yet fraud poses a greater threat than ever. Co-op strives to make the critical balance of seamlessness and security fundamental in everything your members want, with payment solutions that maximize revenue opportunities and streamline operations, with networks that let you compete with big banks through traditional and emerging channels no matter what your size, with member services that provide personal support for traditional and digital services around the clock, and with growth and retention services for fraud fighting, business strategy, and member engagement. All to place your credit union in the best position you can possibly be, top of wallet and top of mind.
Co-op Financial Services, the largest credit union-owned interbank network in the United States, provides an ATM network and shared branching services to credit unions in the United States. Co-op was created by credit unions for credit unions. Through technological expertise and thought leadership that make possible new levels of access and convenience, they are committed to being there for people. They are bringing new technology and insight to the rapidly changing financial services industry so that credit unions can compete with the big banks and grow to better serve their members. They are looking for innovators and collaborators. Co-op Financial Services helps credit union leverage the latest technology and insights to strengthen member connections and propel growth. They unite innovative thinkers with deep experience in the credit union and payments industries to incite progressive ideas built around consumers' financial needs. The result is a continually evolving portfolio of seamless and secure solutions designed to help customers' credit union reach both top of wallet and top of mind status. In 1981, a group of visionary California credit unions combined resources to create Co-op Network, now known as Co-op Financial Services. Their original vision remains unaltered. Co-op Financial Services succeeds by working with credit unions to meet the needs of their members. They started with 20 ATMs. In 1996, Co-op Network legally became a pure cooperative. In 2002, Co-op Network and Service Centers Corporation finalized their agreement to combine and operate two lines of business, EFT and shared branching. Nearly 700 ATMs were rebranded by Co-op Network during the next 24 months. In 2006, Co-op Financial Services became the new corporate name. No longer solely a network, the new name reflects an expansion of services that now includes 3 lines of business solutions and dozens of products. What makes credit unions different from other financial institutions? Their unique sense of purpose. People helping people. Helping people and their communities has inspired the credit union mission since the beginning, and now they go to the very heart of the matter through programs that empower, engage and assist their communities. Through Co-op Purpose, they are proud to offer credit unions unique access to a growing offering of carefully crafted partnerships with other purposeful organizations that align with their joint vision, Children's Miracle Network Hospitals and UBI. Co-op Purpose initiatives. By leveraging the scale and reach of their relationships with mission-driven leaders, Co-op Purpose helps credit unions deliver on the promise of people helping people and financial well-being. Co-op Miracle Match is a $1 million philanthropic matching program that encourages credit unions, chapters and leagues to create and participate in fundraisers that benefit their local Children's Miracle Network hospital. The UB Backpack Drive provides school supplies to kids in communities as well as on national level, while Co-op donates financial literacy resources. Let's see about their mission.
What corporate social responsibility programs are really about, they're really about defining the answer to the question why. What is the purpose of the organization beyond the products? How else do we help people?
So for credit unions, it's about building on what the movement has been doing for years, and that's using business to help people instead of the other way around. We launched Co-op Purpose to help credit unions continually advance their mission of empowering people's financial well-being. It is a dynamic, evolving program made up of turnkey solutions with a variety of purpose-driven partners designed to create real impact within communities. In one partnership, we're connecting credit unions with a trusted community hub, their local libraries, where they'll provide financial education tools to communities in a whole new way. This, in fact, came straight from a Think Prize idea. In another purpose partnership, we're connecting credit unions with UBI, where along with colorful school supplies, underprivileged classrooms will be given financial literacy kits to help them succeed. Another program that we're very excited about is working with OpenIDEO. We are connecting credit unions with OpenIDEO's global community, giving them a methodology and a forum to collaborate, and giving consumers a voice in future financial services products. And of course, our Miracle Match program, which connects credit unions with Children's Miracle Network hospitals to directly help families so that they don't face financial hardship. I think most importantly, we don't want to jump to too many conclusions. We're going to commission some research so that we are sure that the type of efforts that we're putting out there really match up to where the impact is needed the very most.
Purpose plays a part in everything we do at Co-op. It's a way we think, it's a way we approach our business, it's a way we approach products. We're designing those products to truly help people. We should think of purpose not only in terms of charity, but also in terms of how we promote the financial well-being of the member. Thinking this way leads to solutions like CardNav, the first product of its kind, by the way, in the industry. And what CardNav allows is putting security and financial control into the hands of the member. Features like the P2P function for giving that we've added to Sprig by Co-op, and the ability to use ShopSpot to donate your member rewards for a cause. Working with industry partners like the National Credit Union Foundation, RMJ, and CUNA. These collaborations will bring ongoing financial literacy expertise to our initiatives while we bring them to scale, so credit unions can achieve greater impact than ever before. We're calling this Co-op Purpose, but this is really repackaging and adding on to people helping people, which has existed within credit unions for decades. So we're so excited and so proud to be able to offer this for members so that they can thrive.
What's really smart about Co-op Purpose is that it provides credit unions the tools to always live their mission. Magic happens when you actually show empathy. When you show empathy, people will care about you. And once people care about you, they will give you more business because there's trust.